Hi, welcome to the Market Alert for Thursday, the 15th of April 2021. So the Fed has convinced investors that it will tolerate higher inflation. Well, that's what it wants. It's been wanting it for a long time, as we've spoken of many times. However, Tuesday's reaction signaled that an outcome that would likely have been viewed as deeply negative for asset markets a month ago, or a month or two ago, is now viewed as benign. So that's interesting. It's as if everybody's getting used to the fact that we're heading for higher inflation or hyperinflation. And again, this is reinforced here with this headline that food prices are rising. And this is the word aggressively. And even corporate media admits it's only going to get worse. Those at the very bottom of the economic food chain are being hurt the most by rising food prices, which is what you'd expect. But again, the backdrop of the economics of this, I've been talking about this for a year, that food prices are going to skyrocket, and this is where the hyperinflation is going to come from. They're going to try and hyperinflate the way out of this debt that they've got, which they'll fail to do. But it's going to be catastrophic on an economic level. A third bank joins the doom chorus, sees painful correction in 3 months, and here's why. Quietly, one bank after another is telling its clients that the music is about to end. Well, we'll wait and see. I mean, the Fed may do whatever it can, but it is certainly starting to feel different. It's like the Fed has started to hold their hands up. Meanwhile, on the implied volatility front, the Dow making a new all-time high yesterday, and at 13.9% for yesterday, as the market actually did this. Yields 1.63, so not doing a lot at the moment. They're sort of sideways to lower. And then news today, we've got two high impact ones. We've got core retail sales. That's at 130, and I would expect, as you can see there, this to skyrocket. So it's going to be good news for the market. And then we've got Philly Fed and unemployment claims at the usual time of 1:30 as well. Now let's just have a look at the stock markets, and I'll come back to some more news shortly. So in the Dow, we can see that we've got a new all-time high for yesterday as the market moved sharply to the upside. Just remove these fibs here, and we can see that we're up slightly on the overnight, still above the 5-bar moving average for many days now, well, weeks in fact, as we can see here. So a new all-time high of 33,912 for the Dow for yesterday. Quick look at the DAX. And let me just make sure this chart's up to date. So, we can see we're still stuck in this sideways range for the DAX. And in the 4-hour chart, you can see how sideways the markets really are. So, again, need to break to the upside if prices are to move higher. Stating the obvious, I know, but that's what's required. The Dow showing more strength than the DAX at the moment, obviously. As prices are making new all-time highs, so a bit of weakness there. I'm just going to look at yesterday in one view as opposed to bar by bar, because it was so quiet, as can be seen by that 4-hour chart. The market opened, went down to the DP level. You can see it held for a moment or two, and then that became a resistance until we broke back above here, but price is just trading sideways once we got that initial move to the downside, and you can see price is way below volume, the average, and volume's very low, and that's the picture all the way through lunchtime until we got to the afternoon session. This signal isn't a valid one because Lagarde was speaking at this time, the market managing to move up 25 points before she spoke, and then prices just drifting down. And then, of course, at 5 p.m. we had Powell speaking, but the market moving slightly lower again. But you can see, like I say, when you look at the 4-hour chart, you can see how sideways the market currently is. And that's reflected in the implied volatility, also moving lower at this time. Okay, let's have a quick look at the overnight market of the German DAX and see where prices are likely to trade today. So let's just squeeze the chart up. You can see that very, very quiet overnight there in the sideways range. Got the DP above. We're trading above the 200 MA, and we're seeing a bit of buying come in as the futures market gets close to opening in 10 minutes time. We're about 100 points away from yesterday's high. We're a lot closer to yesterday's low of about 37 points there, 50 where the market's currently trading. So keep an eye on either side as the market opens. But yeah, it's like I say, really, really quiet. But again, it has to go really quiet, volatility drop, before you get the corrections in the market. But given the earnings news, etc. at the moment, and also the prospect that the prices could continue to rise just slightly higher yet. So this is why it's important to have these fibs drawn in particular the 89% area. So in the gold market, we can see prices moving higher overnight, starting to move back to the upside there. We need to take out the resistance we've got to the left. But again, also this trading in a sideways move at the moment as well. Meanwhile, in the dollar, we can see that this has moved lower. Quiet day for the dollar yesterday. Not buying pressure there, but certainly finding support at the 89% retracement. So expect a bit of a bounce there. Meanwhile, in the silver market, you can see a quietish day yesterday for silver, certainly of late, and still trying to get above that 25.50 level and break that resistance to the left there. Surprised that they haven't slammed this. I really am. But then, when I was looking around the news earlier on, I'll have a look here. It says that the LBMA acknowledges buying frenzy in silver market and silver shortage fears. The past 12 to 18 months have witnessed some incredible developments in the silver investment market, including a dramatic improvement in investor activity. Well, that's thanks to the Reddit boys and the GameStop activities of February when they cornered the market. But you know what my thoughts about this one, I've spoken many times, that it'd be very difficult to do this unless you actually buy the physical metal, and that's what's been happening as the Perth Mint has run out. There are very tight supply lines. And if you want more on this and the 8 banks that are actually manipulating silver, then have a listen to this interview. Silver price is about to blow sky high. I'm always wary of such hyperbole, but nonetheless, I did click on it. It was clickbait, I suppose, in that sense. But I was intrigued to know why Ed Steer, the guest on this show, is expecting these prices to explode. And when you actually listen to it, I know it all makes sense when he talks about the 8 banks that are manipulating it, and also gives the proof and shows you where they're actually positioned at the moment in this market as well. So well worth a listen, definitely well worth a listen. As you can see, there's the menu of the topics they actually cover in this as well. Okay, that will do it for this one. If there is anything to report, then I will let you know. But as ever, thanks for watching. See you in the next one.